Hey, good morning everyone, and welcome to the PivotBoss Pre-Market Report for May 8th, 2017. I'm Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. We finally pushed through recent highs. On Friday, we closed strong here, did not quite get to the 2401, and today in overnight trading here we have a gap up Sunday evening where price pushes into 2403.75 and is now pulled back somewhat. But overall, this is kind of the process that we were talking about before. At some point up here, if late longs don't get paid, they usually get their stops run. But at some point, with all the sellers coming in to defend, they don't get paid, and now the stops come out in the opposite direction. So that's what we warned about Friday. Friday was the first time where we said, okay, I think here is now when we start to push up out of this range. But again, it takes acceptance beyond 2400, beyond 2401. If the market can find that acceptance beyond 2401, then there's clear air to 2424 and up into 2459.75. So there is much more upside that could be seen here, especially with a multi-month range unwinding. So there's a lot of energy in here that can continue to be unwound to the upside, but it takes acceptance beyond 2400 for that to occur. If there's any failure to hold 2388.75, that's still kind of the key level here, then we may rotate back down somewhat. But right now we have to watch to see how price responds above this level. So right now, short term up. Bulls want to keep 2390 bid for the most part, 2388.75 for a continuation up. But we'll see how the market comes out of the gate here. If we look at the intraday time frame right now, again, here's the gap up that we saw. Sunday evening, gap up and a fill, and now price kind of pushing and holding between 23.92 and 23.88. So right now kind of a little short-term range where you can fade the edges. Nice LV in here. Again, 23.88, 75 to 90 is about the zone where bulls really need to keep it bid here and not really get priced back below that zone. So any push into this area could be a nice opportunity for a day trade back up. If the bulls are going to keep control today. Let's take a look at CL. CL had a significant day on Friday. A major rejection day off the lows. We saw it coming into the day. It had already had a two-handle recovery off these lows. So we got into 43.75, 76s, and it had a major recovery back up by the end of the day. Huge 2+ handle range, back-to-back days. And what I mentioned to the room was this could be the significant bottom we're looking for here after testing prices into 43s for the first time in quite a while. And with this recent impulse move where the market sold off from 53.75 down into 43s, that could forecast a move back toward 48.75, which is the midpoint of that range. So this is the key level to watch, about 45.15, 45.10s. That zone right there, that's the area that bulls really need to keep bid over the next day or two or three for a shot at pushing this thing much higher. We have a high probability target between 48.75 and 50.20. That's the zone where we could be looking at a bounce toward that area if bulls can keep 45.10s bid. So that's going to be very important to watch out for. At the moment, we're seeing a rejection of the previous highs and pushing back into the range. So at least on a short-term basis, we could be looking at a move down into those targets. So if we take a look at the daily intraday time frame here, let's bring that up. On an intraday basis, we've pulled back from those recent highs, and we now have some support down below. So at the moment, there's a little short-term support around 46s, but any failure to hold that level could open up 45.10s, 45.20s. This is the zone where bulls really need to keep it bid if this is on a swing basis going to continue higher. So short term, there may be more downside into this target, and then once it comes into this area, it may be a swing buy opportunity. So keep an eye on that zone. Here's a look at gold futures. Gold futures had a significant bounce off the 1220s. So if we look at the intraday, let's pop it up to the daily here. There it goes. Nice little bounce. I mean, we've had quite the sell-off after price was not able to hold 1263s. This is what we talked about last Monday pre-market, that bulls had been defending 1263s without getting paid. So now it's time to run the stops, and run the stops they did do. Big time push through those areas, and now you can see our key level right at 1221. hit this morning. That's the low of the morning, and that's very important right there. We are also seeing that initial test above the previous high being rejected, at least short term. So we may still be in a downtrend at the moment, but the good news is the market is responding to our key levels. So if there's any failure to get above 1240, right, that could be an opportunity to push it down to the next key level below, which is 1200, and that would also wipe out the recent move and from the origination point of where that rally began. So that could be the next area right into that zone here, especially if 1240 cannot be held. On an intraday basis for gold, looking at it here, again, a nice push downward, a gap down Sunday evening, and a big fill the gap. Short term, 1229s holding as support. So that's an area that could be bought on short term basis here. Any failure to hold 1228.5 could rotate this thing back down to 1221 and perhaps lower. Again, 1240 is going to be the key level to watch up top. Lastly, let's take a look at the NQ. The NQ continues to show quite a bit of strength here. If you look at this thing over the last several months here, we've just gone straight up. It's been straight up. The major stocks that influence this index, Facebook, Amazon, Apple, Netflix, Google, they make up half the market cap of this index. So if they do strong, this does strong. And that's clearly been the case here lately. So there's no selling the NQ. It's only buy the dips, and it hasn't even been many dips to buy. I mean, it's one-day pullbacks or holding patterns, and then we're seeing just burst higher. Right now, 5600 is the key level to watch. So if there's any failure to hold that level, there could be a little bit of a rotation, and that rotation would be a fantastic buying opportunity on a swing basis. So right now, still holding above 5600. As I mentioned before, 5602, March 1st was our target. We finally got it at the end of April, and now we could be looking at more upside here heading into the rest of the month. This is the 25% target of the previous month's range. This one's 50. So this one could be the next upside target here, 57.25, especially if the 56.02s hold. We could be looking at that target here very soon by the end of the week, so we'll keep an eye on that one. On an intraday basis, here's the intraday chart. Again, a gap up Sunday evening, a pullback. And now this thing continues to be bullish overall. So keep an eye back here at about 56.15.5. We may see a return to that level. That's the recent FOMC level from March 3rd. Anytime price goes up too far and can't really see any continuation, you usually see a return back to that level. So any failure to hold above 56.5 here, 56.50, could signal a push back into 56.15.5. That could then spark another return back up. So that's going to be the path to watch out for here if price cannot establish acceptance, early acceptance above 56.5. All right, that's it for now. Let's see how this thing plays out heading into the rest of the session and the new week of trading. Good luck and trade well.